This is Viewpoints by Hennessy, a podcast featuring the latest thinking from the team at Hennessy Funds. My name is Kyle Hyatt, and joining me for this episode is Ben Cook. Ben is the portfolio manager of the Hennessy Energy Transition Fund. Ben, let's get right into it. All right, so Ben, your recent insights in Morningstar and MarketWatch highlighted a predicted slowdown in the U.S. production growth for 2024. Alongside OPEC's continuing production discipline, in light of these factors, and I think coupled with the projection of West Texas Intermediate crude potentially exceeding $80 a barrel, how will these developments influence your portfolio management strategy for the Hennessy Energy Transition Fund?
Yeah, that's a great question. As part of our repeatable investment process, our investment management or portfolio management strategy remains unchanged as we continuously look for the best risk reward opportunities in the marketplace. We're looking for companies with the greatest potential upside and at the same time, minimal downside. In that context, we're looking generally for companies that are capable of generating top line growth and at the same time able to reduce debt as well as return cash to shareholders. At the current time, we think we're well positioned for both volatility on a near-term basis, as well as the prospect for tightening commodity fundamentals in the second half of this year.
Great. Thank you, Ben. Can you maybe explain a little bit value chain and where you're finding opportunity as relates to the fund there?
Yeah, in the context of the traditional hydrocarbon energy sector, the value chain represents the linkage of various industry subsectors that facilitate the extraction or production of hydrocarbons, gathering, transportation, storage, refining, and ultimately distribution of products to end-use consumers. At the current time, within the value chain, we see the most attractive investment opportunity among many of the upstream companies. We're seeing very favorable fundamentals there in terms of commodity tightening, discount valuation, continued capital discipline being displayed by management teams, as well as favorable shareholder return to investors.
Yeah, let's talk a little bit about the core vision and objective of the Hennessy Energy Transition Fund and how does it align with the current global energy landscape?
Yeah, great question. Our vision of the energy transition is that it will unfold over time, but it won't occur in a timely or seamless manner. The reality is that the transition is fraught with challenges and impediments, and that will create a significant amount of volatility in the marketplace. And for us, that means investment opportunity. Our view is that hydrocarbon demand will continue to grow, even though renewable growth will outpace hydrocarbon demand for the foreseeable future. The technology simply isn't there to efficiently displace hydrocarbons. Our portfolio is constructed in a way to capitalize on the opportunity for not just continued hydrocarbon growth, but also the longer-term potential for renewable growth as well. And we're very excited about the upstream sector, more specifically the integrated category, as well as the E&Ps. We feel they're very well positioned to deliver top-line growth, as well as balance sheet debt reduction and deliver shareholder return in the form of dividends and share repurchases. We feel that area will provide the best potential reward for investors in the coming years.
All right, thanks, Ben. Are there any emerging technologies in the energy sector that you find particularly promising for future investments?
Yeah, good question. In a general sense, the upstream sector continues to optimize drilling and fracture stimulation design. So even though we're seeing signs of maturity in many of the U.S. Shale basins, productivity gains are still being achieved by many of the producers in these areas. We continue to look for tweaking or improvement in the drilling process and the application of the fracture stimulation jobs that are employed by these producers.
Okay, let's switch gears here a little bit, Ben. As a energy-focused fund, how do you navigate environmental and regulatory concerns?
Yeah, good question. We do focus obviously on the analysis, operating and financial results of the companies that we follow on a corporate entity level, but we go more deeply than that. We scrutinize the companies and the assets that they develop and the projects that they operate. And in that process of looking more specifically at those areas or projects, we scrutinize geographic locale as well as jurisdiction to determine potential risks associated with shifts in policy or the regulatory environment. When we do that, we try to frame both an upside and downside case associated with any sort of policy change, and we incorporate that into our overall view of potential equity performance.
Great. Let's talk a little bit about trends in investors. Have you observed any notable trends in investor interest or behavior towards the energy transition in recent years?
Yeah, we sure have. The initial enthusiasm we saw during 2020, I think, has given way to a more realistic view of both the timing and the magnitude of what's actually required to achieve the aspirations of the energy transition. Equity values across the renewable energy value chain are more fairly reflecting the potential requirements of both time and the capital required to perpetuate this move towards cleaner fuels. In our opinion, though, valuation still remains excessive across much of the renewable energy value chain. And so, from our perspective, we believe traditional hydrocarbon energy companies, on a relative basis, represent a more attractive investment merit.
Okay, thank you. Let's dig a little bit deeper into the fund now. What's the investment case for Freeport-McMoRan?
Yeah, as I mentioned, we do believe the energy transition will require time. And, as part of that transition, that we will move toward electrification of many of the industries that the world so greatly depends on. As we move toward a cleaner process of consuming and producing power, there's no question that copper will be a big part of that transition, given its unique conductive properties. We suspect that there will be rising demand for copper through the end of the decade. Freeport, as one of the world's largest producers of copper, has a global operational footprint, stands to benefit from a favorable demand outlook for copper in the coming years. The company has visible growth drivers, internal projects capable of delivering copper supply growth. The company has minimal debt and good prospects for cash return to shareholders.
Okay, let's talk about another investment case. How about Diamondback Energy? I think it's a position you've held for 10 years.
Yeah, within the upstream sector, we look for companies located in the most attractive basins. This generally affords them with a lower relative cost structure and the opportunity for productivity gains. One such company operating in the Permian Basin in West Texas and eastern New Mexico is Diamondback Energy. We've seen a continual improvement in drilling from Diamondback, and that's been complemented by acquisitions, which in turn have both contributed to debt reduction and improvement in shareholder return.
Okay, Ben, last one. What's the investment case for Antero Resources Group, which is your largest holding?
Yeah, Antero Resources, another upstream company, a producer of natural gas and natural gas liquids in the Appalachian Basin. The company's minimal hedge position has weighed on share values recently as investors have defensively shed natural gas exposure, but we see opportunity as markets strengthen later this year and into 2025. Antero possesses an attractive acreage position in the Appalachian Basin, a modestly levered balance sheet, and minimal hedges, which in our opinion, which should afford them the flexibility to enjoy improving cash flows with strengthening commodity prices in the coming years.
Great. Ben, thank you for coming on Viewpoints by Hennessy. Viewers, to learn more about the Hennessy Energy Transition Fund, please visit hennessyfunds.com.